Hello everyone, today we're going to be talking about penny stocks, the right way of trading penny stocks. I'm going to be showing my strategy, what I've been doing now, how to trade penny stocks, some trading ideas, gold, biotech, some other companies. So how to properly invest in penny stocks. So many people say it's very risky, don't invest in penny stocks at all. Is it true? Well, for the most part it's true. They're very dangerous to trade. Of course, if we don't do properly, we can lose everything. They're volatile, many companies maybe just want to eat up your money and run away. Some companies are basically just scams. I basically just avoid OTC pink sheets and try to focus on NASDAQ exchanges like in US and some other good ones in Canada. How to mitigate the risks? You can use the core satellite or similar strategy. I'm not going to go over in details about this, but basically what I do is having a greater portion of my portfolio focus on big and nice companies with good balance sheet. I'm putting here about 65% on ETF growth and dividends, or some pretty good companies, individual companies. You can put maybe around 10% in bonds. I don't know if I recommend bonds right now. The yield is not very good and it's a very weird situation in the market right now. But then we come with about 25% in individual stocks and some penny stocks as well. So that all depends on how you want to do this. And then you're going to take the time to analyze the stocks more deeply, go over the balance sheet and things like that. So basically, that's the strategy. Not many details I'm going here, but 65%, 75% if you include bonds in safe ETFs mostly, or some individual companies, depends how we prefer, and 25% in individual stocks and penny stocks. Be careful, I wouldn't put 25% in penny stocks. Some penny stocks ideas, always important to look at risk versus reward. Gold is one of the things I've been trading, not too much lately, but a few months ago. I still believe there is a bull market many years ahead of us here, but I'm not trading anymore, and I will explain a little bit why. They already run too much. I'm preferring some other things, not that it's not a good option, I think it's a good option. Cannabis had a bad 2019, but there is a potential for good years ahead. Biotech, I find is a very good area, lots of potential. That's what I'm focusing mostly right now. So it's good because it has catalysts. The drugs, they go from phases 1, 2, 3 up to FDA approval. And if it doesn't get approval on the submission to FDA, you get a complete response letter. And you can trade that. There's always phases, and if you understand the process a little bit, it's pretty good. It's very good to trade because of high volatility, requires understanding of the process, phase 1, 2, 3, FDA, etc. Of course, there are many other areas, AI, Bitcoin, etc. So to mitigate trading penny stocks, like I said, I focus on good exchanges like NASDAQ in US. Focus on company with recent insider trading activity, buy activity. Companies that have upcoming catalysts. Look at the balance sheet of the company, that cash revenue. Usually these penny stocks, they don't have revenue. A lot of them don't have. Look for a good entry point. RSI, SMA, wait for dips. Avoid non-compliance if it is NASDAQ. Price If it is less than $1, you have to watch out. Avoid reverse split or offerings for capital. So you look at the balance sheet, you look at the news of the company, you go through them and see when they're planning to raise capital. You look at the company, the quarter reports, and you try to see when they're going to be raising capital. It's always good to avoid companies that are planning to raise capital in the near future, because usually the price of the stock comes down. But then, after that, usually goes up again. Look at hedge funds, institutions. I use a lot of 13F reporting to analyze. Good community is always good. Stocktweets.com is a pretty good website. You can search for the company there. There's a lot of information in there. The community just helps a lot. Price target. Multiple number of analysts looking at this stock. A lot of people don't like that, but I find it's just one more thing, and it's good to have. If you have analysts covering the company, it's a good sign. With all of these, investments too risky, and right now we have a downturn in the market. We don't know what's happening. It's always good in situations like that. Analyze, maybe cut your losses, but it's always depending on personal strategy. And when market is in downtrend, penny stocks will drop usually much more than the big companies. Insider trading, like I said, is a very good starting point. I always follow that. It's a great sign. If you have cluster insider, even better, multiple insiders buying the company. That's my general rules, but of course, there's always exceptions. I try to buy only if I see insiders buying as well. So some examples of my recent trading history. Evoke Pharma on the left, on the top left, is a pretty good example. I still own this company. For me, now is a long-term investment, even though there's no revenue for this company, but it's a pretty good opportunity. Onconova on the right. I traded, now they got some bad news. I already sold my position a long time ago. I didn't get all the way to up here, but anyways, got some profit. Galani Gold, I was trading a lot. Galani Gold, I was trading, I don't have position anymore, already took my profit. AGMA, the same thing, there's a lot of ups and downs, a good company to trade, not sure right now. And you see it's coming down so much. Anyways, I always use computer for my trading, for reporting, for insider trading, 13F, hedge funds, and things like that. So that's a pretty good thing to do. That's the way I do. Just to go over some examples, this is a cluster insider trading report in US. And you see some companies highlighted here in green. Some biotech companies. I'm not suggesting anybody to buy it. And you will have to look at these more deeply, which is not what I'm going to be doing now. And my reporting shows how much, that's not precisely, but how much insiders have bought in the last 3 months. And you have the current price here. The target price here, 52-week low and high here. So you see the potential in terms of 52-week high and low here, in terms of 1 year target. The price of the last transaction. This gives a good idea in terms of, is the company supposedly to break out? Here I look at the last insider trading activity, the page, the potential. These green gauges here, I just put my eyes on that and try to find the companies with potential. And then I go individually and go and analyze. That's usually what I do. This is a very fresh report. There are more 2 biotechs here. Like I said, I haven't analyzed some of them. Some of them I brought before. I believe I bought this, Pharmaceuticals. And that's how I usually do. And this is one is Canada, Closer Insider Trading Canada. extended care is not a penny stock at all, but just an example. It actually could be a good opportunity. It's a REIT in the health sector. It might be a good opportunity, but I'm probably not going to invest in this. So that's usually how I do it. See this example, this company, Tracon Pharmaceuticals, is in my reporting, US reporting. I saw this company this week. It was really about to break out exactly on the day that I saw insider trading activity, and then you see the stock just shoot up this week. Well, too late, I didn't have time, and I was not, I need some time to look at. Sometimes the company breaks out very quickly, sometimes not. Also, just to show you here some potential, on May the 3rd, a video that I brought here, one of the companies I provide was Greenpower Energy. So this company, it's like already up like 10 or more. I did invest, it was on my watch list. You can see the video on May the 3rd, around 5 minutes when I brought this company. It was in my watch list at that time and for some time. But anyways, electric bus, unfortunately I never invested in this company. And you see here the chart. I was not following too much closely. They probably did a reverse split. That's what I'm thinking here. And because it was a few cents, like 20 cents or so, the price at that time. It was 28 cents when I brought. You see here the price is like $2 around that time. It was for sure a split, they did. And the company just, went up all the way to $27 or something, actually $30. But anyways, this is what I've been doing. I will see how it goes over time. I will present my portfolio, my account, and I will see over years how this strategy works. Hopefully you like it. Stick with me. Time will tell if this strategy works. I'm hoping to grow my account, but at the same time I'm not in a big hurry. I just want to do things the right way, okay? Take care, have a good day.